Our guest today is Aaron Briggs, a lawyer out of Gibson, Dunn, and Crutcher in the San Francisco area. Aaron's become one of my go-to people for all things corporate and securities law related. He used to work at General Electric doing some innovative things with the proxy materials, the proxy statement, the annual report. I'm Brock Romanek, today on Zippy Point. So Aaron, the Form S-8, an area that maybe not a whole lot of people know a lot about. I haven't done one in 20 years. The law, I don't think it's changed a whole lot over the last few decades, but still, unless you're doing this on a regular basis and you're asked to do something with the Form S-8 and you pick it up, and it is a bit different than other registration statements and other things that you do, so it can get pretty confusing pretty fast. And the first thing I'd say is confusing is what plan offers must be registered.
Sure. Yeah, definitely. The S-8 is supposed to be kind of a simpler registration statement, right, than the S3, S1s, but it ends up actually being really complicated, as we're going to talk about in this video. So what offers must be registered, right? So the basic rule is that securities offered under an employee benefit plan have to be registered on a 33 Act registration statement unless there's an exemption available. And so for a typical reporting company, in this context, you might be able to rely on Reg D or Section 4A2 to exempt plan offers in certain circumstances. And to figure out whether one of those exemptions applies, you'll need to tick through the various requirements of those exemptions. And it largely turns on who can participate in the plan and whether some or all of the participants in the plan are accredited investors. So the types of plans that end up usually falling into these exemptions are your one-off inducement awards for your CEO or other senior executives, director stock plans if they're separate from your omnibus plan, and also non-qualified deferred comp plans that are offered to a select group of folks at the top of the house. In addition to those exemptions, right, and in some cases, what you're dealing with might not be a security at all under the traditional SEC test. And so, for example, the SEC has come out and said that bonus stock that's offered to non-manager employees isn't considered a security that needs to be registered. So apart from all that, pretty much all other benefit plans in which employees are getting stock or a stock incentive award, or in which the employee can invest in employer stock, typically need to be registered. So this would include your omnibus stock incentive plans, awards assumed in connection with M&A deals, employee stock purchase plans, and 401k plans.
Yeah, so one weird thing is when you're working in CorpFin on the staff and you're reviewing registration statements or even 34 Act reports, you really never come across an S-8. And it's not until I got into the Office of Chief Counsel where I had to answer some interpretive questions, and I started looking at S-8s, and there's something called registering plan interests. And, I had never even heard of that. You go through law school, if you take a securities law class, there's no talk about plan interest. So how do you figure out the amount of securities, how many, and the offers that you need to register on an S-8? What are these plan interests?
Sure. Well, so it's easier said than done. And so it ends up being actually pretty complicated. But so maybe starting first with the bucket of a plan where you have an authorized share pool. So this is your typical omnibus equity incentive plan. And you would typically use the share pool number or the increase in the share pool if you're dealing with an amendment and register that on S-8. Some companies try to save money and register only a portion of the share pool at a time. I might caution against that because it can cause problems later on if you forget to register additional offers, once you get close to running out. And of course, it puts more pressure on your internal tracking system. And, maybe now's a good time to kind of pause and say you absolutely need an internal tracking system to monitor your S-8 usage, as we'll talk about. And so that all, kind of sounds fairly easy, but it starts to get more complicated when you think about things like, is there an evergreen provision in your plan? So that means that the share pool will automatically increase each year pursuant to some formula in the plan. So if you have one of those, you'll need to do some math to estimate your burn rate, which is, how many awards do you plan to grant annually over the next few years? And, to really figure out the appropriate number that you should register. And then you have to, of course, monitor your usage. From a tracking perspective, of course, you should remember that counting for S-8 purposes is going to be different from how you track the number of shares you have left under your plan reserve. And so without getting too much into the weeds, if you have, for example, a share recycling feature in your plan, so this means, you grant awards and then the awards are forfeited and then the shares go back into your share pool under different circumstances. Or if you have a fungible share pool, which means that full value awards like your RSUs and your restricted stock, they deplete your pool faster than option awards. So if you have any of those provisions, then likely the counting, for your equity plan purposes is going to be different from S-8. And so I think it's really important to remember that what we're really registering on S-8 is the offer and sale of shares, not the shares themselves. So if you have these provisions, you'll want to give this some thought. Just know that there's not a lot of guidance from the SEC. It's an area where there's not really a lot of consensus among practitioners, and you're going to see a ton of different practices out there from what companies are doing. So you'll just really want to give it some thought. And one way to think about it as you get into these tricky areas is, maybe it makes sense to take a conservative approach on some of these things and register additional offers and sales than you think you need, just given some of the drastic consequences of getting this wrong. So that's kind of for when you have a share pool in your plan. So like the next bucket would be, what if you don't have an authorized share pool? And so, this happens most often in the context of a 401k plan or an ESPP. There, you really need to get a sense of what your burn rate is based on your historical share usage. You adjust it for your current stock price expectations, and then you come up with some sort of round number with a cushion that you can register. And you'll need to make sure you're tracking all the offers and sales under the plan so you can figure out when you're getting close and might need to register, more offers. Again, another area that gets complicated pretty quickly, not a lot of guidance, lots of different practices out there. For example, you have a 401k plan. One thing you'll have to figure out is, do I want to track and count things on a net or gross basis? And so maybe to take an example, let's say participant A in your 401k plan, purchases 100 shares of company stock for their account. Then they sell those shares, and on the same day that they sell those shares, another participant in the plan, buys 100 shares. And so from a plan perspective, on a net basis, right, you maybe have 100 shares, but from an S-8 perspective, should you really be counting, 200 shares against the S-8? So these are the types of questions that you have to think about depending on the type of plan that you're registering. So I think, Brock, the last thing you asked about was plan interests and what are those? And so it's a bit esoteric, but for certain plans, the SEC considers an employee's ability to participate in the plan itself as a separate security, apart from the company stock being offered in the plan. And so this wouldn't be your typical omnibus equity incentive plan, but rather plans that are voluntary to participate in, where the participant can contribute some of his or her own money, where you can invest in company stock, and then where the company's involvement in the plan is something more than minimal. And so the typical plan would be the 401k plan. What does this mean from an S-8 perspective? And so you'll need to include verbiage in the S-8, including the fee table, to the effect that the S-8 registers an indeterminate amount of plan interest. But you don't have to pay any additional fees on this. And then, one thing that, some people miss is that once you do this, will trigger an obligation on the part of the plan to file an 11K each year going forward during the offer.
Yeah, that's an annual report for the plan. So you're putting on your in-house perspective hat. What about tracking, doing the actual share counting? Who handles it for the plan share reserve? Is that the stock plan administrator, whereas the lawyer's handling the S-8 counting? And then is this done on an Excel spreadsheet, or is there software? I mean, what's your personal experience since you've been in-house?
Sure, yeah. So, so it's definitely good to have a tracker. I think an Excel spreadsheet works well for this purpose just because there's a lot of different numbers that are involved. So it's obviously easy to do the formulas. It's something that I find benefits from having input from a few different sources. And so, legal maybe owns the spreadsheet, but there's all these different inputs that would go into it that we can talk about, where your, stock plan administrators or equity plan administrators are all going to have inputs around what the, how many shares have been used up in the plans and what's been granted and forfeited and all of that. As you think about the S-8 tracker, I would also think about it a bit broader because it kind of all gets wrapped up into, are you tracking the authorized shares under your certificate of incorporation, right? To figure out when do I need to go out to stockholders to get more shares? Are you tracking the share counts in your plans to know when do I need to go at stockholders for more shares in an equity plan? Are you tracking the S-8 usage? Are you tracking your S-3s to know when they expire, every 3 years, for example? And so all these things can be brought together in an Excel spreadsheet. Maybe you have an overview page that kind of highlights when things are getting close or getting into the danger zone. And then you want to start thinking about, taking corporate action to replenish.
Yeah, I should mention that I just recently taped a vid guide about shareholder approval of equity plans, and includes a great interview with Reed Pearson from Alliance Advisors, who gives some really good practical tips about how to help get the vote in so that shareholders do approve the planned amendment, so to increase the authorization of the shares. So what about using Treasury shares? To fund a planned share reserve? What does that mean, Treasury shares?
Sure. So Treasury shares are shares that have already been issued by the company, that have come back to the company, for various reasons. Maybe the company has a share buyback program, for example. But the source of the shares that's being used to fund the plan, it might be open market, it might be Treasury shares, it might be newly issued. That doesn't really matter for the S-8 context. You'll have to do an S-8 regardless. Where it does matter is when you get to thinking about a New York Stock Exchange supplemental listing application, which we're going to talk about in a little bit.
And how do you determine the amount of the filing fee to be paid on the Form S-8? What are offset fees? That always confused me.
Sure. Yeah. So you first figure out the total number of shares that are going to be offered that you're registering, which I think we talked about a little earlier. And then you figure out your maximum offering price per share. And so there's a bunch of different Securities Act rules that explain how to do this. But essentially, for an omnibus plan, you're going to use a recent market price for the stock prior to the time you file the S-8. So specifically, you'll use the average high and low price on a day within 5 business days of filing. And so at the risk of stating the obvious, it'll be to your advantage to pick a date when the stock is trading lower than otherwise. For options that have already been granted, which you can still register on an S-8, such as assumed options in an M&A deal, you'll be using the weighted average exercise price to figure out that input. And so once you have those inputs, you multiply the two together. You'll then apply the current SEC filing rate to come up with the total filing fee. And for that, it's always a good idea to check the SEC website, since it will change from year to year what that rate is. And so that amount, less any money that's currently in your SEC account, would be what you would need to wire, into the SEC, unless you have fee offsets. And so what are fee offsets? So under SEC rules, if you previously paid a registration fee that applies to securities for which an offering was terminated or withdrawn prior to all the securities being sold, you can figure out the pro rata portion of the filing fee that relates to the unused amount. And then you can use that to offset a future filing fee, as long as the new S-8 is filed within 5 years of the old one. And of course, the trick here is that you'll likely need to have an S-8 post-effective amendment on file in order to be able to do this, because the S-8 post-effective amendment will terminate the prior offering, or at least, with respect to the shares that are no longer going to be offered under the plan and are being transferred to the new plan, it would allocate that appropriately. So assuming you did that in your S-8 that you're about to file, you just need to explain this offsetting in a footnote to the fee table. You have to include a bunch of specific details about it that the rule requires, and then you check the appropriate box on EDGAR when you file.
Yeah, the SEC, if I remember correctly, usually announces its filing fee rates sometime in September, right? The SEC's fiscal year end is for September 30th, like all the federal agencies. And so they announced their new rate schedule that's effective October 1st. It could go up or down. There's a formula by which they set it, and they issue a press release. So if you're looking for the filing fee rate, you would just go to the section of press releases on the SEC's website, look for the press releases in September, and you'll find the latest one. And again, they change that every year, once a year in September. So I know you can register multiple plans on a single Form S-8. How does the calculation of the filing fee work for that? What goes on the cover?
Sure. So, what you'll see on the cover is, the full name of each plan, under which you're making offers on the S-8. And so that, that could be a 10, that could be a lot depending on the company's preference for doing that. But in terms of the filing fee table, you would calculate each of the filing fees for the different offers separately, and then add them all together to come up with your, total filing fee. And so it'll just mean a more complicated fee table and likely, extra footnotes to explain everything.
And then let's talk about filling out the rest of the form. What else goes on the cover? And
the cover contains a bunch of basic information about the company that's typically required on an SEC form. So, for example, your address of principal executive offices, the agent for the service of process, your SEC filing status. It also includes the name of the plan under which the securities are being registered, which will be multiple plans if you're doing multiple plans. And then it'll have the calculation fee table that we've mentioned. And so this can actually get quite complex, the table that is, just given the different circumstances in which you might be registering on an S-8. So, we already talked a bit about, you might be registering assumed options in an M&A deal or an omnibus equity incentive plan, or you might be doing, dollar amounts under a non-qualified deferred compensation plan. And so depending on what you're registering, you'll need different footnotes to explain.
yeah, liberal use of explanations, explanatory notes is a good idea to let the SEC know, and shareholders to the extent they're looking at your S-8, and plaintiffs' lawyers who are looking to catch you in issuing more shares than you have authorized. I mean, that's really your biggest audience, perhaps. So what else is part of the S-8? That plan prospectus is unusual. And what about exempt?
Well, so I guess the rest of the S-8, after you get past the cover page, you'll have the standard description of the items that you're incorporating by reference, which will include, among other things, the description of underlying securities, and then your 10K, proxy, and in subsequent 8Ks and Qs that have been filed. One practice pointer that, some companies miss is that when you're listing out the 8Ks that you're incorporating by reference, you typically don't want to include your item 202s and your item 701s, because these are often furnished and not filed. And so you'll want to pay attention to that, so you don't inadvertently attach offering liability to these if you don't have to. So once you get past that, you'll have a description of your indemnification provisions that apply to your directors and officers. So in the S-8 context, that means not only your charter and bylaw provisions and maybe related indemnification agreements, but potentially also indemnification provisions in the plan itself. So you'll want to review the plan to see if there's anything you have to add there. And then after that, you'll get to the typical undertakings that you have in a registration statement. And so for an S-8, this will include, updating the S-8 for any fundamental changes that happen during the course of the offering, as well as removing unsold securities at the end of the offering. And then last but not least, you'll have your exhibit index and signature pages. And so on the exhibits, standard things like your charter and bylaws, your legal opinion, expert consent, which is typically just the auditor's consent. And on that practice pointer, you'll want to coordinate with your outside auditor, well in advance, so everybody's on the same page from a timing perspective to get that in place. You'll have POAs for the signatures, and although technically not required by the rules, you'll also attach the plan itself. And then if you're dealing with an ERISA plan for the S-8, you'll also have an IRS determination letter. So after that, you'll have your signatures, and that'll be your CEO, CFO, CAO, and a majority of the board. And then I guess one thing to note is if you are registering those esoteric plan interests, then you'll also need a signature by the plan itself, which is typically done by the trustees of the plan. So that's it for the S-8 itself. Brock, you mentioned the prospectus, and yeah, the thing that's different here, unlike other registration statement contexts, is that the prospectus is not included in the filing. You just need to include all the information that makes up the prospectus and send that out to participants and award holders. I guess one practice pointer is, when we're working on an S-8 with companies, everybody tends to be very focused on the S-8 and what's going to be filed. And sometimes, people don't often think about the prospectus. And so it's often a good idea to add that to your T&R checklist early on to make sure it's not forgotten.
Yeah, it's interesting. I mean, do the securities lawyers get involved in drafting the plan prospectus, or is it the plan administrators that primarily handle that?
It depends on, I guess, the in-house staffing that you're working with and also the expertise of the outside lawyers. But usually the S-8 is handled more by, at least on the outside, by the securities lawyers. And then when it comes to the plan prospectus, you typically will involve more of your employee benefit plan counsel.
Yeah,
because exactly. Yeah. I mean, apart from certain securities, a few securities law requirements for the prospectus, it ends up being largely a summary of the terms of the plan itself. So
yeah, explaining things to the plan participants, to your employees. And so what about the tricky thing of adding new shares? Do you have to file a new S-8 when you realize you've done your share accounting, you realize you're running low, or can you just file a post-effective amendment to your existing S-8 to add more shares?
So unfortunately, the rules don't let you just file a post-effective amendment. You'll have to file a new S-8. But what you can do is file a short form S-8. And so instead of filing a new registration statement that has all of the required sections that we just talked about, you can file a shorter version that consists just of the cover page, an explanatory note explaining, what you're doing and what the previous filing was, your exhibits, signatures, and then anything that's changed since the last time you did the S-8. And so, one thing that's good to keep in mind, or that often changes that people don't remember, is that, if you've updated your indemnification provisions in your bylaws for your directors and officers since you filed an S-8, you'll want to update the description and put it in your short form.
So if you're a New York Stock Exchange company, and we come up now on one of my favorite terms of art in the securities law, you need to file a SLAP, a supplemental listing application. When you file an S-8, what is that all about?
Sure. Yeah. So it really depends on the source of shares for the offering. So if you are using just Treasury shares to fund the plan, then you actually don't need to do a SLAP with the New York Stock Exchange, but you will need to notify them in advance in writing. And if you're issuing newly issued shares to fund the plan, then you would do a SLAP. And both the notification form and the SLAP can be found on the New York Stock Exchange website, and it's submitted through the listing manager that NYSE companies are familiar with. So assuming you need to do a SLAP, the thing to keep in mind is that the NYSE typically requires a 2-week turnaround time to approve the SLAP, and the SLAP needs to be approved by the New York Stock Exchange before the shares are issued. So you'll just want to build that into your T&R checklist. In practice, companies typically file the SLAP around the same time as they file the S-8, if not before. In terms of the substance, it's pretty straightforward, pretty short document, and it ends up being mostly exhibits of readily available documents like your plan and the proxy statement under which the plan was approved.
And NASDAQ doesn't have a counterpart to this.
That's right.
So that was amazing. It's like you teach this class every semester, and this is the 20th time you've done it. It's really amazing, Aaron, how you're able to just give us everything here and really just in a punchy way that it's informative. So I thank you so much for taking the time to be with us and providing this with the guidance. Thank you.
Sure, no problem. Thanks, Brock.